Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Thursday, the 15th of February, 2024, the time 6:10 p.m. Central Time. I've decided that next week, and we'll talk about it in a few minutes at the end of this, I'm going to have another live webinar. It's time. I'm going to do it on Thursday, the 22nd. So it'll be 12:30 p.m. There'll be an ad about it. Invites have been sent out if you're on my mailing list already. To get on the mailing list, you have to go to our website, sign up for one of our free offers at iraepstein.com. We then put you in, and then you get invited to these. They do fill up rather fast. They're 20 minutes long, the webinars. I invite the questions before we go. I prepare the charts, and it's like one of Cramer's lightning rounds as we go through the whole thing. We cover spiders, ETFs, stocks, and the futures markets, and we take questions, and away you go. It's fast-paced. It's a lot of fun. Okay. So what hasn't been fun is trying to figure out what are these markets doing right now. The dollar retreated a bit more. I don't think it means much. You're still over the 104 level. Most currencies are just sort of meandering right here, back and forth. Which way do they go? The PPI is the second part of the two-step dance. We started off Monday with the CPI number. Market looked at it, oh my God, things are hot. Well, it was only up a tenth. Let's understand that. But the fact that instead of the market continuing to decline, that we got a bump in inflation is one of the parts the market looked at. Now, shelter costs were up. Now PPI comes out and you don't get the weight on the shelter cost as much. Will this be a hot number or a cold number? How will the stock market react to it? We're still seeing the AI parts go, although NVIDIA has started to slow down a little bit. If you're watching it, when I say slow down, it's had a couple of losing days or stable days. How's that for an answer? But everything around it on fire. You know, how many millionaires were created out of nothing in the past 30 days as the AI craze just took over? Interesting times for sure. Another market that's caught on fire. You're still going. Bitcoin. As much as Gary Gensler doesn't like it, somebody does. And now that we can see that there's live ETFs and people consider it an investment category, they are moving into it because they can go into the ETFs, and there's many different ways to go into those. But we're here about the metal markets right now. So let's go to them and see just what we've got at this point. Well, maybe before we do that, why not take one look at what tomorrow's going to hold? Let's do that first. We get the January Producer Price Index, the PPI, 7:30 in the morning, followed by housing starts, which will be lost in the noise of the PPI. I can tell you that already. People will pay almost no attention to it. They'll all be enamored with what happens there. The currencies will catch on fire, the metals will catch on fire, and the stock indices from whatever that number does. Fire could be up or down. It's going to be wild what happens. Then the University of Michigan at 9 o'clock, the consumer sentiment indices will come out and give us an idea what the consumer is thinking about the markets. All right. So as I said, when you look at gold, you've had a correction and you're down into the zone of the 18-day average of closes. Now, you hadn't done that since October. And you've come back, you're down for the week 1%, you're under that number by $16. I don't know if the PPI can lift it back up or not from that, or if it's going to continue on its decline. What I can tell you in looking at the chart, it's a bear slope in the market. I can also tell you you've got a pattern that's very clear of lower highs, lower lows. That is bearish. The market is underneath the gray line, which is the 200-day moving average. The green is the 100. You see that? And the 18 is trying to get down to them. Rallies should be contained as the market starts entering resistance, if it even can do that, into the 2024, 2025 area, the 100 and the 200-day averages all the way up to 2039. You'd have to get over this number here, and I think that's around the 2047 area to say, okay, this is over on the downside. We'll negate that by getting over it. I think you're going to find willing sellers on the rally. I don't know what they'll do in front of the PPI, but I do think that when you get up there, that's what could happen. The market's gotten its bounce off the lower Bollinger Band, but it didn't find any support. The reality is at these key averages with it. You're getting a bounce from there, but that's now the resistance area, and you are oversold. You're not embedded. So for the bulls, that's the good thing. The bad thing is if the dollar takes off again here and you get this bounce, then you're going to make that attempt to try to begin the embedding process, which could carry you down another level. When you look at the gold-silver ratio, notice I've changed the color of this to the silver, and that's because silver is finally gaining on gold. It's around 84 to 1 now. About 84 ounces of silver you need to get 1 ounce of gold. It had been up near the 91.5 zone area, and it has since fallen back. So silver has found its footing. That's the best way to say it. You see that against, again, those Bollinger Bands. They're so darn important. I'm always amazed at how few people understand how to work with them. But lower lows, now you're trying the higher highs. Which way? Well, momentum's up. You're not trending. You're caught more or less in a trading affair where you haven't been able to really get up to a Bollinger Band in a very long period of time. It would be a statement of strength to be able to get up to it. I have my doubts it's going to be able to get up there right now. I'm not bullish or bearish, though, and that's the nice part. The first resistance point in copper is right here at the 100-day average in green. As the market came down, I told you, you don't want to get too involved in this until the Chinese come back from their lunar holiday. They're the biggest buyers and users of copper. So you want to see what they do as they start filling their bins again. They've been gone for a week, and the market is saying, okay, we'll have a market that's got downside bias, and there's plenty of it because the 200-day average, you can see this gray line here and the red, they're right together here. See them at 379.20, 379.45. So between the 100-day average, 376.20, let's call it, and that's your resistance, but it was overdue for a bounce. You had gone straight down from upper band to lower band, and now the market has to determine what next for the market. Told you yesterday that the key in this platinum was to get over this high, but to close over the 18-day average. Notice it's refusing to give us a strong close. If it can do that, then you're on your way probably to the 924 area. And if silver goes and platinum goes, then what's the market saying? Well, it's probably saying industry is pretty good. You use these for industry. We had today, if you saw the New York Empire State, that was a solid number for a change. So industry in America is picking up. The XLI, which is the ETF, has gotten strong. It's at resistance on the charts, but the ETF has gotten very strong. So I'm watching it because I've got clients that I had told to get into it. And I'm the guy that didn't believe that these industries would come back. And yet as a chartist, you just read the chart, close your eyes, buy, sell, and that's what you do. And by the way, that's what charting is about. Charting is not about more than that. You read the pattern, but you always look around. Am I going into a major report? Is there an event that can change the chart out of a sudden lightning speed? You never know overnight that some event can't happen, but you don't have to walk into reports which may be game changers. Example, for you SPDR ETF people, earnings. Big earnings especially. You just don't know what they'll do. We don't know what NVIDIA's earnings are going to do on the 21st. We assume they're going to be better. Everything around it has been better, but is a market price to perfection? Well, that's what you deal with on these charts. So in the dollar, it has had a heck of a run. I expected some resistance to show up at the upper Bollinger Band. I said it here. It's not as though after the fact, oh, I should have said that. Now, what am I studying? I'm studying where are we in the stochastics. They're not embedded. You had a 78 reading. So we have an overbought market that if it breaks, I would expect that you will see good support come in, 103.80 to 103.75. You'd have to get underneath 103.36.5 to say, hey, this uptrend, maybe it's not really what we should be. Something else happening. Look at how close the 18-day average is to the 100. If this market takes off tomorrow, off the PPI, and the dollar gets strong, resistance 104.85, but that'd be a new high for this leg of the move, opening the door for way back here towards the high 106, 107 area. And you would kick up the momentum. You might start that embedding process. You put it all together, and wow, you can have a pretty interesting day tomorrow. So I want to remind you, if you'd like to attend the webinars that we have, they're fast-paced, they're a lot of fun. I open the door on them at 12:15 p.m. so you can come in. Here's how it works. You get an invite from me. In the invite, you fill out the form. We send you your user ID and your password. You have to have those to get in. Seating is limited. Once you come in, you can come in anytime from 12:15 to 12:30. At 12:30, I start. And it's nonstop go because a lot of you send me the questions, and I do get questions as we're doing it. I'm looking at them. I set my screens up so I can see the questions coming in. I always ask you to do me one favor. Give me all your stock ETF questions first. The reason is I can do the futures on the fly. There's only 40 of those charts. I'll have them all ready to go. There's thousands of stock ETF charts. I can't possibly bring them all up by pushing a button. Even Kramer can't. He's got a whole crew behind him when they're bringing that up. They're doing that all for TV ahead of time. They could have quite a few of them into the chart, into the part, but I'm not a stockbroker. I'm not a TV producer like they are. Whole different game there. But I think my knowledge is pretty good. So if you have questions, call our staff. You go to iraepstein.com. No. You have to do it here. It's not going to be on the website. So move your cursor to the top there. You'll see an icon. Give it a click. That is the way to do it off of this. Do we understand that? If you have a question, you call my staff. They'll send you the invite, okay? It's not on the website that you can sign up for it by our design. With that, I'm Ira Epstein. You have yourself a good evening. Wait for the PPI in the morning. It's going to be exciting. I'll see you then.